An important narrative of stock investing is identifying themes that will dominate the investment narrative tomorrow. Today, if we think of such themes, a few things come to our mind. There is AI, there is cybersecurity, there is healthcare innovation, and of course, renewable energy. Now, if you have been reading news, you will know all about the effects global warming has been having on the planet. In 2023, as per NASA, Earth's average surface temperature was the warmest since record-keeping began in 1880. And while there has been talks of reducing dependence on fossil fuels to reduce climate impact for decades, the last few years have seen a more determined, target-based move into that direction. And that's what makes renewable or green energy such a powerful investment theme. Hello and welcome to ET Money's YouTube channel. Today, we will talk about renewable energy as an investment theme. Now, as you may already know, renewable energy involves natural sources of energy such as wind, solar, hydro, geothermal, biomass, and so on. Since these are cleaner, more sustainable forms of energy, for many investors, this theme is not just about returns, but also about responsibility towards our environment. So if you are an ESG conscious investor, this theme can even be the centerpiece of your portfolio. Now in this video, we will see some data to understand what makes renewable energy a hot favorite among investors. And we will also discuss a framework you can use to invest in this theme and also discuss some stocks. But an important disclaimer first. While we will be talking about stocks in this video, these stocks are in no way recommendations. If you are interested in any of these stocks mentioned in this video, you must do your own due diligence. Also, let me request you to subscribe to this channel if you aren't already a subscriber. And don't forget to click on the bell icon so you never miss a video from us. Alright, so let's start with some facts and data about renewables. The IBEF's Renewable Energy Report of December 2023 tells us a lot about the potential of renewable energy in India. Now, IBEF is a trust established by the Ministry of Commerce and Industry to promote Indian products and services. Here are some interesting nuggets of information from this report. 1. As compared to its population, India has low conventional energy resources. However, it has abundant solar and hydropower resources. Thus, renewables are poised to play a leading role in bridging the supply and demand gap. Second are the ambitious targets that India has set for itself. The country plans to reduce its carbon intensity by 45% by 2030, achieve 50% cumulative electric power installed by 2030 from renewables, and achieve net zero carbon emissions by 2070. Third, as a major step in this direction, 97% of the power generation capacity added in FY23 came from renewables. Since 2014, about 5.2 lakh crore has been invested in India's renewable energy sector. Now, if you take a look at the installed renewable energy capacity over the years, it has grown at 15.4% per annum. Now, by 2030, India plans to increase this capacity to 450 gigawatts. This target will provide investment opportunities worth about $221 billion by 2030. Now, the government has been encouraging a move towards renewable energy with various policies. Some of these include the $2.4 billion National Hydrogen Mission, PLI schemes in solar PV manufacturing, and the recently announced plan of rooftop solarization of 1 crore households. Now, all this suggests a promising future for renewable energy, and what I have described is just the tip of the iceberg. And that's why renewable energy stocks should be a part of your long-term portfolio. But how should you go about picking stocks in this sector? That's what we will discuss next. Alright, so we will discuss a 3-step framework you can follow to shortlist stocks to invest in this theme from all the power stocks. First, filter out companies with a market cap of less than 1000 crores. The reason for using this criteria is to remove very small companies. Second, from the stocks remaining, remove companies with debt to equity ratio of greater than 2. Now, the debt to equity ratio is a popular leverage or solvency metrics that compares a company's equity with its debt. The lower this ratio, the better. A company with zero debt to equity ratio can be thought to be in a strong position. But the power business is capital intensive, so you need a higher threshold, and debt being twice the equity can be a good one. Third, from the stocks remaining, remove stocks with interest coverage ratio of less than 2. Now, the interest coverage ratio tells us if a company is in a position to service the interest costs originating from its debt. It is calculated by dividing the EBIT or earnings before interest and taxes by the interest expenses for a period. Now you should also remove those companies that have no presence in renewable space at all. This can be a manual exercise as you will need to check the business segments of each company. Now, if you apply this framework, what are the companies that make the list and how do you evaluate them? Well, we will discuss exactly that in the next section. Alright, now applying the framework we talked about gave us a list of 16 stocks. These 16 stocks all have a presence of some kind in the renewable space, but do note that their businesses can vary widely. For instance, among these 16 companies are power generation companies like NTPC, Adani Power, Tata Power, Torrent Power, NHPC, SGVN and so on. Now these power generation companies can be thermal dominated or renewables dominated. For instance, NTPC, Tata Power, Adani Power are thermal dominated companies with some presence in renewables as well. On the other hand, NHPC and SGVN largely operate in the renewable space only. And then there are companies which are in power generation but have other major verticals as well. For instance, BF Utilities has a presence in the infra space but it has wind farms as well. GVK Power and Infra operates both in thermal and renewable segments, but it has airports and road assets as well. The third set of companies includes equipment manufacturers, EPC or engineering, procurement and construction companies, turnkey solution providers, etc. For instance, insolation energy manufactures solar modules, solar power units and solar batteries. Vari and KP Energy are in the EPC business. Urja manufactures electric two-wheelers and batteries. Now, given the varied business models of the companies operating in the renewable space, when you look to play the renewables theme, you need to do a couple of things. First, understand the business model of the company in question. How much is it currently focused on renewables? And which subsegment of renewables is it focused on? Number two, understand the vision and strategy of the company for the renewable space. Let's take the case of Tata Power to understand this. The data that I'm going to talk about has been sourced from the Tata Power's annual report for FY23. Now, Tata Power is an integrated power company, so it's present across all segments of the power value chain, which is generation, transmission, distribution, and new age energy solutions. Now, Tata Power has a renewable energy generation capacity of 3,927 megawatts. Its conventional energy capacity is 10,183 megawatts. So that's 2.6 times bigger. This makes Tata Power a thermal power major as far as capacity goes. Now, apart from the renewable generation capacity, Tata Power has over 3,700 EV charging points. It has executed solar rooftop projects of over 1,600 megawatts. It has a manufacturing capacity of 4.6 gigawatts for solar cells and modules. Now, it would be useful to check the breakup of the company's fuel mix. Of the 37% renewables installed capacity, solar constitutes the lion's share of 21%. So if you want to play the solar segment of renewables, Tata Power could be a possible bet. On the other hand, its hydro and wind capacities are comparatively smaller. Now in terms of capacity, solar comprises 2,995 megawatts, while hydro and wind constitutes 880 and 932 megawatts respectively. But that's the present. Tata Power has committed to achieving 100% generation through a clean and green portfolio before 2045. This forward-looking statement tells us about the commitment the company has towards renewables in spite of the fact that currently it's predominantly a thermal power producer. The company has also outlined its vision for the next 5 years. It plans to have over 25,000 EV charging points and a 30% market share in rooftop solar. It wants to expand its renewables portfolio to over 15 gigawatts. Overall, Tata Power doesn't just have a significant footprint but is also dedicated to renewables for years to come. So, when you start your research on renewables, it's worthwhile to spend some time reading the annual report of the companies you are interested in. Doing so will give you a good idea about how the company is currently positioned and what it plans to do in the future. Okay, let's move to the next metric now, and that's ROCE, or Return on Capital Employed. Now, ROCE is an important profitability metric, especially for capital-intensive companies. It is obtained by dividing the operating profit by the capital employed. Let me explain it quickly. A company has two sources of capital, equity and debt. Equity is what the shareholders have contributed and debt is what the company has raised through external financing. Now, ROCE helps assess how productively the company is deploying its capital, both equity and debt. So the higher it is, the better. It's a more comprehensive metric than its close cousin ROE, or return on equity, which just measures return on shareholders' capital. Now, the 5-year average ROCs of the 16 renewable energy stocks range from 28% to just 1.34%. The top companies in the list are Insolation Energy, Waaree Renewables, and KP Energy. Okay, let's filter out companies with a 5-year average ROC of 15% or more, with 15% supposedly being a good return number for the invested capital. Now, doing so leaves us with just 5 names: Insolation, Waaree, KP Energy, BF Utilities, and GVK Power. Finally, let's apply the valuation criteria to select the reasonably priced stocks at the moment. We will use the PE to earnings growth or PEG criteria. It is obtained by dividing the PE ratio by earnings growth rate for a period. The PEG ratio measures a company's valuation in relation to its growth. A PEG ratio of less than 1 is considered desirable. Of the 5 stocks that we shortlisted above, 2 stocks have a PEG of less than 1. So Waaree and KP Energy come out to be the most promising stocks at the moment as far as this framework of stock selection is concerned. Waaree is in the solar EPC business. It has installed over 10,000 solar projects with a total operating capacity of 600 megawatts. The company is also a solar developer that finances, constructs, owns, and operates solar projects. Now, over the last 3 and 5 years, the company has shown a robust growth in revenue, operating profit or EBIT, and net profit. However, there is a reason for caution too. The stock is currently trading at an eye-watering PE of over 200. Now, in terms of PEG, it looks undervalued given the ultra-high growth rate of the company, yet one should be cautious as very high growth rates often don't persist. Now, over the last 1 year, the stock has already run up by a staggering 1093%. The second company is KP Energy. It focuses on wind energy and providing EPC, operations, and maintenance services for wind farms. It even has its own renewable power generation assets of 18.4 megawatts. Now, while its growth numbers are not as high as Waaree, they are attractive and testify the potential this company has. KP is available at a PE of 47.1, which is much higher than its 5-year median of 14.54, and yet when it's seen in the context of PEG, it appears attractive. Now, over the last 1 year, the stock has gone up by a massive 474%. So, should you buy Waaree and KP Energy? As I said at the start of the video, our intention is to not give you any stock recommendation. If you're interested in any of the stocks mentioned in this video, you must do your own research. What we've tried to do in this video is suggest a framework you can use to pick renewable energy stocks. Now, this is just a framework and not the framework. So feel free to modify it as per your requirements. You can choose to add more metrics to it, or maybe take a more subjective call based on the company's vision and strategy. For instance, while Tata Power may not have appeared in the final list, its vision, strategy, the backing and trust of the Tata Group all make it potentially formidable long-term bet in the renewable space. So don't go solely by the outcome of this video. The real fun in stock investing is doing your own research and then coming up with an investment idea that you can stick with through thick and thin. And this is all we had for you today. I hope you liked this video and found it useful. And if you did, don't forget to share it with your friends and family. And I'll be back soon with another insightful video. Till then, take care.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.